So, this month's theme is a shift towards defensive quality. I've been rotating capital out of some high growth, high beta, and cyclical assets to secure stability as we navigate what is now a complex market environment heading into year end. I've only made one purchase this month, and that is adding to our position in Bristol-Myers Squibb, establishing it as a foundational defensive anchor in the portfolio that still offers access to one of my favourite themes of biotech. BMY generates exceptionally strong free cash flow margins, often exceeding 30%, and consistently trades at a discount to its peers, with a forward price-to-earnings ratio currently at around only 7 times. The company's drug portfolio, especially in oncology, is fundamentally non-cyclical, providing durable earnings regardless of the economic climate. And on the chart, BMY has spent the last 6 months establishing a clean and defined base of support. This technical accumulation pattern signals strong institutional interest at these levels and makes it an excellent low-risk entry point for our long-term capital. The capital used for our BMY purchase is being generated through profit-taking across several key holdings. Firstly, I fully exited our position in the cryptocurrency Tron, and we have also reduced exposure in COINBASE. To be clear, the regulatory environment in the US is still really positive, driven by increased institutional adoption and the success of the spot Bitcoin ETFs. This is a bullish long-term signal for the entire ecosystem. However, the sector remains highly volatile. Bitcoin has recently been testing and then broke the $100,000 level, and this is of course a psychological milestone. I continue to hold large core positions in both Bitcoin and XRP to maintain meaningful exposure to the long-term crypto growth story. I also closed out some Microsoft. It has delivered an outstanding performance, but with its trailing price to earnings ratio of around 36 times now, it makes sense to take some profit. The technical chart shows the stock entering overbought territory as well. I've also reduced exposure to C Limited to manage market share risks, having now made profits of over 100%. And while their e-commerce segment is growing, the company still faces operating margin pressure and requires constant capital investment to maintain market position, despite recent improvements to profitability. I'm taking profits in Chinese biotech SinoBio. Its recent sharp spike was driven by speculative trial news, so we're de-risking the position now to avoid exposure to the next binary event. I'm also trimming the stake in Hasbro. While the Wizard segment continues to deliver its strong performance, the consumer product segment faces ongoing pressure from retailer order timing. I'm de-risking as the company focuses on its transformational strategy. So I believe the portfolio is now slightly better positioned for stability in the continued global uncertainty. Thank you.